following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to have you with me here today. And we're going to get right into the U.S. dollar here. We've come off a little bit off of this target that we talked about around this 128.29 area. And we want to focus on this and talk about some other currencies because, you know, the International Monetary Fund, the IMF, you know, and the Chinese yuan, they're talking about putting that into the mix, the euro actually getting not devalued, but becoming a lesser factor in the mix of the currencies that comprise the dollar index. I mean, this is, you know, when we talk about currency changes, wholesale changes like this, those have a tendency to really affect equities markets. They're always usually a precursor, not always usually, they're usually, can't use the word always and usually in the same sentence. They're usually a precursor for some kind of market disturbances when we have currency fluctuations and wholesale changes like this. So keeping that in mind, and you know, again, that's not like a timing tool, but it's, if you go back and you know, do some research on that, it's that's when a lot of the fund managers start switching gears. As we look at this, again, we talked yesterday about, you know, getting away from these unfair highs if this was going to be a little bit of a resistance area. We talked about also the crowding action that's happened in the past couple of days. This is kind of the, you know, what you want to see if you're long. You want to see it consolidate around new highs like this, and those are kind of classical technical analysis patterns to move higher. Actually, if you're short, you want to see these things get away from this, and then you can start selling resistance points. But this price action doesn't seem to want to get away from these unfair highs on the weekly most powerful profiles that we offer. That being said, we're gonna move into the Australian dollar really quick, and they've had some fundamental news come out. We talked about staying away from this on the short side. This has been one where, you know, you close weekly above, you come back and get that high probability setup. We've been talking about this. The higher lows will navigate to lower lows on price action, and I fully believe, especially with the news that's recently out, we're going to get to that 74, 39, 40 area. Won't go in a straight line. But here's the daily. Got another little breakout going on our daily profiles. And if you go into our scanner, you go into the Forex section, and you'll go there. You'll see that one there. RJP will get into that in just a second. It's a good question about the currency futures relative to the Forex. We'll answer that in just a second. I want to point out a couple of things in the scanner, though. This bar one up, this is really clean and clear of the noise level of the top of the box. One. All right. This 24 signifies, by definition, a break for 24 weeks in a row on the downside, and still in a so-called downtrend because we're within this profile in the weekly. But remember, we've clean and cleared what would be categorized as top and are having a valid breakout on our daily here. And I want to show you something if we've got okay, see that top right there on the euro British pound cross? That on the 240, just to give an example, is saying that we haven't gotten out of the noise range on the breakout. It's the first time we've lurched above. I want to point out something else that I found before we start answering that question, RJP, that you know, little things that I don't necessarily explain every day, but we've actually got a new version of this coming out later today, at worst case tomorrow morning, and you're going to even get more tighter custom filters that are going to just completely pinpoint things even further, and also get explanations up top when we go into these breakouts, uptrend, downtrend, strong downtrend, blah, 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 whatever, you're going to be able to click on a explanation bar that's going to just tell you basically the formula of how we're calculating this. Now, one thing I really failed to mention, talking about breakouts and getting through the noise level, for instance, on that daily Aussie we just talked about, if I go in here to my weekly or daily sort, and let's just say I'm going to pick neutral on the weekly, okay? And I'm looking at the S&P 500, and what it's going to do is it's going to basically sort these properly for me. I'm going to go in here to my top right beside the weekly and sort the column. But what I'm going to do is I'm going to look for something. I'm going to go down here. It's showing all gray because that's what I wanted to see is all gray. I just chose that. I'm going to see top one with the arrow up. All right. Now, what does that mean? That means that by default, the number is associated with the first time it's in the profile from a recent breakout above that profile. So what does that mean? I'm going to show you graphically what that means. And then hopefully at some point I don't really need to look at the charts anymore the way I look at this, because I kind of see the landscape of certain instruments relative to the profiles. And I look at the numbers, I look at the arrows, I look at the colors. And a lot of times I'll go over here and pump that out. But as we look at, let's just look at the top one, or let's look at Clorox. Everybody knows Clorox. Top one, arrow up. All right, so what that means really is it means it's a possible candidate in the making for a key reversal breakout. And all of these top one with the arrow up are indications of that. So if I go, and I'm going to show you these. This is another cool little feature of this. I don't talk about the little innuendos that much. But if I go into Clorox on the weekly CLX, and you'll see that, you can look at this as support, as uptrend support, and it's in the noise area. But what I want you guys to notice is that these are possible candidates for a failed retest. So it's the first bar up last week, and this is always the case when you look at top one in the gray, only in gray cells. These are in profiles. It's barely within the profile. If this thing gets some momentum, and the cool thing is all these particular, I'm going to go to Coca-Cola. It's a similar situation, top one arrow up. Dang it. Let me make sure you guys are seeing my charts here. So I'll go to Coke. And even though it's within the so-called top of the box here, top of the profile, by definition, within 10% up above or below the inflection point relative to the height of the box, it's just a simple math calculation. What you can do, and I'm going to just show you a couple other ones here that are in the same vein. ESS, Essex Property Trust. Go to my weekly. They're all similar situations, breakouts and possible failed attempts, but, again, still within the noise area. So these are ones to keep on your radar screen, and keep shutting down my screen here. So what you could do, just to keep those on the radar screen, because they're weekly setups, and again, if they get back above the profile, they're going to change colors to green. They're going to go top two because it's still second week above the profile. But what you could do is go in here to a list. I could say possible turns, or actually let's call this key reversals. Key reversals. Key reverse. How about that? Nice. And I'm gonna go in here and I'm gonna put in my candidates. Coke. Where's it at? Right there. I'm also going to put in, what was the other one we looked at? Clorox, CLX. So I'm going to save that, and I'm going to go into my list here. Actually, I'm going to have to add it to my. There's my list I just created. And what I'm going to do to make it easy is I'm going to go in here to my quick nav. And I'm going to add that list to my navigation. I'm going to hit save. I'm going to go back to my dashboard, and it should be in my list here. Key reverse. Okay. So that's my custom list. I put my two instruments that I wanted on my radar screen for this type of scenario. And I just want to keep my eye on this. And during the week, if I see things change, and by the way, we're putting in alerts into this system also. Sound alerts, visual alerts. It's going to email you text messages, all that kind of jazz. Just stay tuned for that. We've got people working on it. But, these are things to, kind of be aware of. This is kind of a Tom O'Brien sort. I mean, he's looking for things that are changing big time. And these might be on a long-term basis. Little key reversal situation. We've also got on that same notes, we've got uptrend reversals. These are by definition. I'm going to have these to you in the next upgrade, which is today or tomorrow morning at the latest. Have all the explanations. All relative to profiles, and I'll explain what we're looking for here. We're tightening up also in this next one. Downtrend reversals, this is becoming more and more particular. It was kind of loose. Well, let me reset the sorting here. It's been kind of loose. When it comes to, the filter itself, we're getting much more pinpointed with this particular filter and the rest of the custom sorts. And I'll be explaining what the math is behind that again on the kind of help key up here, right beside the name of the custom sort. Okay. Let me go back to my dashboard, reset sorting. And I'm going to go back to my downtrend reversals. I thought there's something wrong there. Didn't see a lot of red there. It's weird. Okay, so as we go back to the dashboard, we had a question about, we were talking about the Aussie dollar. We've been bullish on that for a while. As soon as we crossed the bottom of that unfair low on our weekly around 71 and some change, let me just pick out what that was really quick. $71.69, $71.70. As soon as we cross that, we've been, it's okay to be long, not okay to be short based on that long-term divergence that we've been talking about. But as we go back into, and the Forex products that we look at are a lot of times time at price because we don't, instead of volume at price, because we don't get a chance to get an aggregated volume coming from an exchange for actual currencies or Forex products. So we're going to talk about this a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were talking about the Aussie dollar on the Forex side. And we had a question about the Aussie dollar currency futures on the CME. Now, what we do on the Forex, this is, if we feel like we've got a good data vendor, we do volume at price. We try to do all of our analysis profiles, create the profiles. A lot of the other things that we do with our other indicators, Navigator. Relationship volume to price, and we kind of rely on the exchange to give us that valid volume. Unfortunately, there's no exchange for Forex. You can get data vendors that tell you, we're aggregating blah, 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 90% of the biggest banks in the world or whatever. But a lot of our currency or straight Forex products, a lot of times we've done time at price instead of volume at price because of that fact alone. It's the only time we change away from volume. So going back to the Aussie dollar on the Forex side, this is kind of what you're seeing on the long term, and here's the profiles, and here's that divergence in Navigator, right? And here's that 72, 69, 70. Now, when we go to the currency futures for the Aussie dollar, it's going to look a little different. Obviously, the same price action. And believe it or not, I think it's actually cheaper in the long run to trade currency futures. That's been my experience. And there's an arbitrageable event, obviously, that happens between the currency futures and the spot. And this is the spot, so-called spot. So you're going to get the same price movement generally speaking. But since we're doing time at price here and volume at price, this is the only anomalies that you'll find. I'm going to go to on this. I forgot what the symbol was on this platform. We've got a lot of platforms to deal with. You've also, is this right? No, I'm sorry. I'm doing the year 2016 here. Thought that looked odd. But as we look at this, you'll see the same price action. And looking back, some of these currency futures don't have a ton of volume. Might be a little bit handicapped here, but as you can see, the profiles are a little bit different on the weekly. That same divergence is there on Navigator. And right now, we came up to that profile, bounced off, and we're sitting at the top here. But, the good news is we've got a breakout here happening on the daily, just like we do on the daily on our spot. And those long-term profiles are going to be a little bit different because it's looking back at, a little bit of a handicap situation on volume to create these profiles. And these are the anomalies that you'll pretty much only find in these 6 products on the scanner, which is in the futures section and the spot, Aussie, and the Forex section. So the longer term time frame is going to be a little bit different inflection points, but as you see, the rest of them are pretty much on par. And this is doing volume at price, and the other ones are doing time at price a lot of times on those other currency or Forex products. Okay, hope that answered the question, RJP. Okay, so as we go into a couple more products here before the next break, get this out of the way. All right. We talked a little bit about the dollar. I wanted to chat a little bit more about where's the Canadian? Yeah, the Canadian's been something I've been, pretty longish. If we get any pullback in the dollar, we're sitting kind of at the precipice here on the Canadian dollar. I've been bullish as heck. Anytime we get pullbacks in the support areas, 2 weeks ago, within the last 2 weeks, we got into that 129.60. That was just a gift to get back to that support area. Right now, it looks like we're going to have a new profile appear here. We're trading above price action, yellow bar. That's usually indicative on a weekly of a new profile. Here's the daily. Very similar looking to the dollar as far as kind of congregating up here around these inflection points up top. I'm kind of looking for a blow-off move in the dollar, which would carry the Canadian higher. So we'll talk about that a little bit more when we come back to the break, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were finishing up with the Canadian dollar. Let me pull that up. Let's see here. Let me save my page. Camera. Sorry guys. Had my screens blow up again. All right, finishing up with the Canadian dollar. Are we at some resistance here, just like the U.S. dollar? There's a Canadian dollar. Showing a little bit of relative strength to the U.S. dollar, but and again, got some movement right now as we speak. This is real time. So I'm looking for the U.S. dollar to do some steam blow off moves here, and the Canadian dollar is even stronger than the U.S. dollar, and I think on a relative scale, and I think this thing's just going to head higher. I don't think this is too short at all, and you got some short-term support at 133.56 on this product right now. Okay, let's go back to the 10-year really quick, and we did roll on this to the March contract now. You got support at 125.29.30. I'm just going to continue to look at that as support. You got targets up top of 127.14 on the March contract. Let's take a look at. Did we roll in gold too? My guys are not keeping up with this. Let's see. Sorry, guys. We're going to come back to gold. Yeah, that's what I put in, CGH, but it's not giving me any data on e-signal. I don't know what the heck's going on here. Huh. Mark, I got to come back to that. Appreciate you putting that in. We're going to look at something else before we look at gold. Let's take a look at crude oil, the January contract really quick. What do you do with this thing? Again, the big number is 43.43. We need a weekly close above there. That's to play it safe. All right. So let's look at this. Got so many emails about this. Is it time to buy this? Is it a chance of a lifetime? We just need some confirmations on this. If we get a close above 43.43, then there's going to be some people scratching their heads and thinking on the short side that they need to get out of this, and we could rally back up to 50.36 again up top here. So that's the way I'm looking at crude oil. Do I think it's a short down here? I actually don't. So I'm just waiting for some long confirmations. We had a divergence, similar situation on the Aussie dollar. Very similar to this type of setup a while back. That's kind of borne itself out to be true right now. But again, it's those divergent situations aren't incredibly great timing tools. They're just giving you a heads up. Be aware of this. Might be able to take advantage of it. I tried that, Mark. On the gold contract, I just looking. That doesn't seem to be the continuous contract, though. Well, let's hold off on gold. I'll get an idea about what e-signal's mapping that to right now. We want to take a look at the consumer discretionary ETF. This is something that I did a Bloomberg brief on. A little bit of a scary trade, like we talked about. Not the weakest thing in the world relative to the S&Ps, but I like how this thing's acted. Got some bad news on the retailers yesterday. Initial target 79.43, and I think this thing has possibly seen, even though we're sitting right here, kind of rattling around up here. If we get past this weekly unfair low, weekly unfair high, and get down below that 79.43, I think it's time to step on the gas pedal with this, down into much lower numbers, ultimately 74, 77, and even 71.84. Why? You got a divergence pattern here. You have to look at these new highs with suspect eyes as this is happening down here. A really big divergence, actually. And again, not an incredibly good timing tool, but kind of putting the dart on the board for you to pay attention to that relationship. Okay. Alrighty. Let's take a look at the S&Ps. We got to cover those. It's not a lot of new information here. In fact, I talked to some guys in Hong Kong last night that basically this was their take on the whole thing. The markets had kind of bailed some people out. These are big institutional traders I'm talking about, and these were sell-side brokers trying to get institutional traders to trade through them. So that's, if you guys don't know that relationship, it's kind of going away. But you got a bunch of brokers that create research reports and trading ideas that contact institutions that have zillions of dollars and say, hey, do some transactions through me, and here's why you're going to do those transactions through me. Here's this great piece of information. And they've got a ton of cash sitting there on the sidelines, and maybe they wanted to put it to work every once in a while, and they say, okay, here, what are you going to charge me? 6 cents a share. No problem. Let's do it. So that's a cost, by the way, of the fund doing business that doesn't actually show up, didn't used to show up anywhere. And those types of relationships, again, are getting kind of dismantled regulatory-wise. But 6 cents a share is about 100 times more than you could pay for it right now just as a retail customer. But for that information and doing that transaction, a broker might make on a 100,000 share trade. What is that? Is that 6,000 or $6,000 charged the customer? His cost is whatever, 50. And that's not a bad afternoon. So as I was talking to these guys last night, they're like, man, there's just nobody around. Anybody who made money that got bailed out for the year has just taken off for the holidays completely already, even in November. So they're sitting around with their thumb up there, you know. And he said anybody trading now that they're trying to talk to doesn't know what they're doing. And it's kind of weird. So, you know, there's going to be, in my opinion, this is indicative of obviously not a lot of volatility, but there, you know, this particular month coming up might be unusually low volume, which we may have some kind of intraday real herky-jerky swings. So if you guys are day traders, you know, that's kind of a crapshoot which way those swings are going to go. But I don't see any big moves happening before the end of the year. I mean, we may drift higher. We may stay in a tight range and kind of sit on the launching pad for a new move up after the first of the year. But right now, this is very longish looking. All right, let me take a look at gold here can I say we? Since some other folks figured this out. Here we go. All right, so what's the new numbers here? Still around 1087 was the December contract, 1090, that big weekly unfair low on the February contract. And, you know, what's gold up to right now? Still big, just big overhanging inflection point at 1090, 1091. Here's the 240. I wouldn't get too terribly excited about this. We got a new profile attempting to appear. That's new supply, even on the 240-minute range. Not a big fan of buying gold yet. Just I would rather see a new daily profile appear, or at least an orange bar, which would mean my scanner logged me out when I had technical problems. Let's get that back up. Well, oh, here we go. Going back to my futures section, we still got December up here. Let me, this is the first day we've had that. Let me get that changed really quick. All right, so we're going to update the scanner right before the market opens here. That'll happen, guys. Apologize for that. Still stuck on the December contract. Okay, so we're going to take a look at the NASDAQ really quick, too. We're going to give some numbers for that. Obviously, very similar to the S&Ps, who's sitting right there, right below the inflection points on this one. 47.0607 is the big number there, but again, you know, this thing is, if you're short, you got to be ready to pee in your pants right now. This thing will not come off. And that usually means everybody's got to cover at one time, as we have a big 200 or 300 point day move up, possibly. Again, we could go down. Make sure you put your stops in, guys. All right, we're going to take a look at the scanner really quick. All right, we're going to go back to our custom section. And we're going to take a look at downtrend resistance really quick. All right, so as we look at this, and we're tightening this up today, you know what? I'm going to show this tomorrow, because in tomorrow's program, this will be a much less universe, even though all these picks are really, really good here. Edison International, wow, bad. BB&T. Let's take a look at BB&T. Daggone it. I'm having all kinds of problems here. Okay, so this is actually a North Carolina bank. This is one that, you know, we talk about downtrend resistance. So what does that mean? That means we've crossed the border before. We're coming back up into inflection points. So what this does give you, as you can see right here, a couple of weeks ago, we came up into this lower inflection point, 3904. Is that what that is? Yeah. And the scanner had that on the screen as far as a custom sort then. We've got it on a custom sort again. I want to take a look at the XLF and just reference that. And I also want to go into the scanner while we're waiting for that to load and go into my ETFs just to kind of give a bird's eye view here. I'm going to go into my XLF. Daggone it. XLF. I am blind. There it is. God, it's the top center one. I'm an idiot. There we go. All right, so I'm going to go into BBT. I see BB&T. I see that in my scanner grid, and I kind of get some information there, but I see it's also at the top of a profile on my daily. So it's very near the weekly unfair lows. It's already kind of bounced off of there on the downside. And we've got kind of a dual inflection point lineup here. That's a nice little DMZ to bank off of on the short side. All right. Markets may go higher. Here's the kind of vicinity it's in right here. I'm sorry. God. Let me go back to BBT. That's the XLF. So not only have we, come up into these weekly unfair lows, we're sitting at the daily unfair high. So you've got a kind of a resistance DMZ, if you want to call it that, between 38.72 and 39.04. If we get a close above there, then I think it's okay to go long for a while, and the market could drag a lot of stocks up. I think the XLF's a little depressed because, the waiting game could continue to ensue from from Yellen and her crew. But these are not the worst stocks to be in right now, the financials. I want to take a look at Amazon really quick. We played a game on Thanksgiving. You're riding in the car with a bunch of people you don't see that often, family members. Everybody's got their own life. So you're trying to find things to talk about sometimes that are interesting. So me and one of my nephews, he had his iPhone, and we were going, well, how much do you think Walmart makes a year? What's their revenues per year? Billions, what's blah, blah, blah. So I said, what's Amazon? What's the annual revenues for Amazon? Not that much on a relative scale, because they don't bank all the charges that they get. It's basically just looking at their spread, their part. And then he said, man, because a lot of these profit margins were somewhere between, 10% and 30% sometimes. Gilead Sciences has a 60% profit margin, by the way. So we'll hit this right after the break. I'm getting ready to get cut off here. We'll talk about Amazon's fundamentals for a second, but then we'll talk about the technicals when it comes to Amazon. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We were talking about Amazon. We're talking about a little game we were playing on Thanksgiving, and my nephew was like, "Oh, they got to have 20% margins, and they must make, God, up there with Walmart. They must make 500 or 600 billion, or excuse me, have revenues of 500 or 600 billion a year." And I said, "I think you ought to look into that." We're kind of playing the prices right, lower. The guy wins, can't go over. But he was astonished to know that Amazon only makes about a pittance, and their profit margins are 0.18%, the way we were seeing it in Wikipedia, latest updates. So, that being said, I told him, Jeff Bezos is the smartest guy in the world because he's a multi-zillionaire, and the company really doesn't make any money. So somehow he's constructed this amazing situation. So technically speaking, we've got an orange bar here on our weekly, and we go into our scanner. We see that right. Well, actually, we just changed here. I'm sorry. Where's Amazon? Right there. I was looking at Amgen. There's Amazon with the orange peel back, up 32 weeks in a row after the most recent breakout. So now you're seeing gray uptrend 40. What does that mean? Even though we've got on our daily, we've got an orange bar here, this daily doesn't change and upgrade itself on E-signal until gets right at the market opening on daily bar. So this is yesterday's daily bar. The current price is actually 671.05, and that's showing 664.80. So in the scanner, it's actually showing, we told you we're going to have pre-market calculations now in the scanner. This is holding true. There's Amazon. Right there. I'm blind. And it's showing within the box now and showing 40 and the arrow up. So what does that mean? That means that it's since the last breakout above profiles after we had a little bit of a dip here, it's showing 40 bars and within the current profile. And it's also showing that Amazon has the inflection points, 48.20, 51.80. So, what does this all mean? I think at the very least, since we've got a weekly new profile attempting to appear, this is the clear-cut sign to get out of your longs. There hasn't been any reason to go short this thing in a long time. Now you got an opportunity with some new profiles attempting to appear on the weekly. And if you want to jump the gun a little bit, you got something to short against now. For the first time, 670.67. Let me repeat that. 670.67 stops above, and you can play a little bit of a sell resistance game here. In my opinion, and the XLY is very, very dependent on this particular product. So I think is it over 12% of the XLY alone? You get a little bit of market help to go down. This thing could actually easily hit 640 and even lower, and then you're going to have some new supply on the weekly to have to pay attention to. You need some market help for that to happen. This, of course, could even drag the market down itself, but my view on the broad market is we're going to probably go higher, but this is a little bit of an opportunity, at least in the short run on Amazon, for the first time in forever, as you can see, to step on the short pedal. Guys, you've been great. Stay tuned for Larry. He's next. All the hosts on TFNN all day long. Stay away from CNBC. Do yourself a favor. I'll be in London tomorrow. We'll try to do the show from there.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.